There's an interesting thing in terms of data economy where it's not just about quantity, it's about how proprietary it is. China didn't end up having as much of an advantage because really the development has been within the models. It's not like the person with the best model or the company with the best model suddenly wins because everyone tends to have these models. So ultimately, from a VC perspective, in terms of interesting companies that have both the value capture and the value generation, it's going to be companies that have proprietary data that are going to be able to ride the wave of AI continually getting better and ride the frontier to essentially continue to be at the forefront with data that's extremely hard for people to replicate.
James Wang from Creative Ventures here to talk AI, national AI competition, hard tech investing, and we're even going to get into automated pizza making. This show is actually brought to you by Creative Ventures. Of course, we have to kick it off with a discussion about the implications of Huawei's new Kirin 9000S chip. James, dialing in from Taipei. Welcome to China Talk. First, I want to start with the Huawei's breakthrough 7 nanometer chip manufactured out of SMIC. So, we've done one pretty deep dive show with Dylan and Doug, who had a very bullish take on the sort of broader implications for this.
NVIDIA will have competitors in Huawei and Matex and in Byron in Alibaba, Tencent's in-house chips, right?
One of the nits you had to pick with this sort of bull thesis on just how good sort of Chinese semiconductor manufacturing could be in the next few years, particularly with respect to AI hardware, was this idea that replicating what NVIDIA did with CUDA would be a relatively straightforward task. So James, why don't you take a step back, sort of explain what CUDA is, why it's so important, why the whole world uses it to train their frontier models, and what the Chinese ecosystem, if it starts, relying on Huawei or BREN AI accelerators to make their own, GPTs and Claudes, what that will entail from a software perspective.
Okay, getting into controversy right from the start. This sounds a lot like a hardware person talking about how software is really easy to do. I think that's my sort of exact words that kicked off our conversation there. So, look, I mean, CUDA is basically NVIDIA's proprietary, the programming language and the APIs of it is not proprietary, but what it is essentially it's a much easier way to write parallel code that's targeted only at NVIDIA GPUs. And this has really been one of Jensen Huang's like big initiatives where essentially it's like if you're saying that, hey, we're going to be able to just get around it or whatever, it's kind of like Jensen Huang. It's like, is he a joke to you sort of thing? A lot of the low level libraries, a lot of the AI research, everything's pretty much been built on this. So if you're actually going to be able to if you're going to try to actually move away from it, you have to rebuild a lot of infrastructure, a lot of architecture, a lot of these different things that basically you need to start from scratch for a lot of it. And I think one of the arguments for, hey, it's actually going to be pretty easy to do it is sort of belied by AMD basically having tried to replicate it with their own version of it called ROCm, which is supposed to be compatible with it, supposed to work well, but is still buggy, doesn't work particularly well. I think the underlying part of it is CUDA is part of NVIDIA's big moat and advantage, where they essentially are able to use this to lock a bunch of PhDs and other folks who are researching stuff in, able to have people build up their models and everything else using it. And it just makes it really, really hard to move away from. It's why pretty much machine learning for GPUs almost exclusively just uses NVIDIA GPUs still.
There was a great sort of viral George Hotz, who's this sort of like star YouTube programmer, riff that he went on where he sort of spent 3 days trying to program with the AMD offering, and he had like first he had the customer representative on the phone, and then he like ended up having some super senior level person, and at the end of it he was like, this is hopeless, this company is terrible, no one will ever build anything on this stack, I'm sorry, long NVDA. But it is a slightly different proposition, I think, in China versus like AMD like trying to figure out software versus the entire sort of Chinese software, Chinese AI ecosystem, ending up sort of deciding that this is something that their nation needs and then working together on it.
Yeah, though I'd say that that's one of those things where if you make an argument that you can throw infinite money and infinite time at anything, you can pretty much replicate anything, right? Just from the perspective of VC, it's one of those things that you have to make sure you don't fall into, because you can always poke holes into anyone's business model by basically saying, yeah, definitely Intel or whoever will be able to replicate this. The question is, will they? Now, China, I agree, has had a history of doing this better because they've needed to. But even for, say, Huawei, I mean, they have their own OS now, but there's a reason why they were trying to use Android for the longest time, right? You'd have to basically build up something that just matches everyone else's capabilities from scratch, which is a pain in the ass. You also have to then keep it up and maintain it yourself, which is, again, annoying and a pain in the ass. And from the perspective of the entire global machine learning community basically sitting on top of, for the acceleration, for the optimization, essentially CUDA, you'd basically have to take each and every single thing as you're playing around with it, as you're prototyping, and try to translate that into an optimized version of whatever else you're using. So it just is a pretty massive slowdown. It's not impossible. It's just like everything else here. It's just a really, really far step back if you have to start from scratch there.
Yeah. Speaking about that Huawei OS, I was watching some Billy YouTube like ecosystem comparisons of what you can do with your Huawei phone, tablet, and PC versus your Apple phone, tablet, and PC. And like, look, they now have features that you can't do in your Apple ecosystem, and that is like remarkable for them, really not investing in this at all. It being Harmony OS being like a joke, to it now, I being able to like, drag contacts and have screen extensions and all this cool stuff, which like Apple's kind of still locked down. So anyways, I take your point, James, that like building an operating system is a little less sort of like bleeding edge tech than trying to replicate like this generation's greatest minds, like new innovations and compiling in sort of generating and deploying models. But it's not impossible.
Well, maybe I'll make one quick clarification here, because I think the way that picture looks for listeners, it's like there's like brilliant minds, Manhattan Project sort of things all working together in terms of AI community and open source. In reality, these are a bunch of statisticians, PhDs, whatever, throwing stuff together. It kind of sticks, it barely works, it's poorly documented for a lot of this stuff, and then it like runs and no one's quite sure why it runs. If you've ever dealt with PhD code, you'll kind of realize that's actually often how it looks. That is actually harder to deal with than perfectly documented, oh, all I have to do is translate this into a different vernacular in terms of programming, because you look at it and it's like, I have no idea how they were doing this, I have no idea why it even works, and then you need to translate it. That's a harder problem, actually. So it's not impossible, it's just extremely messy. So that's just to paint a picture of what the AI landscape and a lot of these libraries actually look like.
So we've done, a lot of shows about compute. We just chatted about sort of algorithmic challenges a little bit, but data is something that we haven't covered a ton on China Talk. And now we have firms like Scale AI that are valued in the tens of billions of dollars, which are ostensibly just around to create better data. So we've sort of seen in the sort of like U.S.-China like data competition debate, I think some pretty sort of very surface level arguments really over the past decade about like who's winning and who's losing. So before we get into that, give us a sense of like the data economy and where we are in fall 2023 when it comes to like who needs data and why to make their models more useful.
Yeah, totally. I think one of the interesting things to remind people, because I think analysts usually are able to paper over stuff that they talked about in the past that didn't turn out to be correct and then move on from it. One of the big arguments that we had some time back, right, the received wisdom, the commons, whatever, was that China is going to dominate AI because China has all this data. They have a ton of people, they have less data privacy laws, and then suddenly that's going to mean that their AI is going to be much better. That didn't turn out to be the case in terms of pretty much as we're seeing in terms of OpenAI and other stuff now. There's some questions as to why that's the case, and there's a couple of different threads to pull here. So one of the threads is that as far as data is concerned, OpenAI's like, all these LLMs and other things, they have true value, right? Just in terms of societal value. But one distinction to make is that value to society and value, economic value overall, doesn't necessarily translate to captured value for a company. And for a lot of these models, for a lot of these different products that are getting put out there, they're essentially, not to oversimplify, but they're essentially, the data underlying it is just stuff scraped from the web. Sure. When we're talking about ChatGPT, you scraped a bunch of text from the web. When we're talking about some of the different generative models for video and either photos or art, again, you're basically scraping that stuff from the web. How much defensibility do you actually have for an open source model, for the most part, tweaked, but open source model, data that everyone with some expense can scrape from the web, and models that might take a bit to train, but even in terms of like a few $1 million or whatever, throwing it against a GPU to train, a bunch of GPUs to train, very trainable in terms of a company that's either well-funded or a large company. How much defensibility do you have in terms of all of these different pieces of it? And I think the answer that I would come to definitely is that there's not much defensibility. And one of the challenges there is that how are you going to actually have that ecosystem evolve over time? But getting back to the China point as well, I think this is another thread to pull. One of the things that you've seen over time as these models have gotten better is that transformers and LLMs didn't just get better because we were able to throw more data at them. They got better because the representation of data and how we actually use it fundamentally got better with transformers and with LLMs around 2014, 2015. We actually had trouble telling the difference between pictures of cats and not pictures of cats as two classes of things. And the reason we got better at that was not because we got more pictures of cats or more compute power. The reason we got better at that is because our models got better. So there's an interesting thing in terms of data economy where it's not just about quantity, it's about how proprietary it is. China didn't end up having as much of an advantage because really the development has been within the models. It's not like the person with the best model or the company with the best model suddenly wins because everyone tends to have these models. So it's actually kind of hard to capture value if you're using one of these open source models with data that's easily available, even if it's a high volume. So ultimately, from a VC perspective, in terms of interesting companies that have both the value capture and the value generation, it's going to be companies that have proprietary data that are going to be able to ride the wave of AI continually getting better and ride the frontier to essentially continue to be at the forefront with data that's extremely hard for people to replicate.
ChatGPT in Chinese, GPT 3.5, like in Chinese, having been trained on like 0.2%, its corpus is only like 2.2% Chinese, is still like orders of magnitude better what you see out of Chinese model. What are your theories on like why it's seemingly, given that like, all the research papers are out there, like data is available, like what is potentially stopping the big Chinese firms from being faster followers than they are currently?
In terms of why the Chinese AI ecosystem as a whole, not just in terms of LLMs, has not really been progressing as fast, I've heard, and this becomes speculation, different things from Chinese, people at Chinese tech companies, Chinese family offices are related, etc., on why this is the case. Usually the argument comes down to one is there's regulation in terms of from a company level exploration of some of this. China has much more stringent regulations on what you're supposed to actually check, what the model is supposed to do, and putting that much time and energy into trying to deal with just having it be compliant with the regulation is actually a pretty big burden from a company level. And from an individual level, I mean, this is sort of your gestalt feel, right? A lot of the money, a lot of the entrepreneurs, whatnot, are trying to get out of China right now. And it's one, sure, because of the economic circumstance, but also two, given how Chinese regulators pretty much stomped on the tech ecosystem before, everyone's still kind of wary about basically saying, well, now everything's okay and we can sort of go back to normal.
Yeah, there's this great irony that like Dario Amadei's first job in AI was actually at the Baidu lab in the Bay. So for them to like be able to spot talent and and give people the sort of degrees of freedom to make real make real breakthroughs, only to really not be seemingly struggling to be fast followers on this, I think is remarkable.
Some of the issues here in terms of regulation and whatnot is self-inflicted. And at one point I did get asked, like, okay, from a macro perspective, what's the outlook and how does China look? And look, they have a lot of room to ease. They have a lot of room to actually do fiscal stimulus. They have a lot of room to actually do the right things to make their economy turn around pretty quickly. It's just a question of willingness. Because again, it's like, are you actually going to give domestic entrepreneurs a really free rein to do whatever they want? Because if you're talking about trying to take an export-driven economy and try to make it more domestic consumption, a lot of these other things that have been priorities, guess what? The Chinese tech ecosystem was extremely inwardly focused, almost myopically so in certain cases, and creating domestic consumption for gaming and other stuff. And that was actually a great rebalance for your economy, and you pretty much stomped on it.
So James, I want to come back to this idea of AI looking more like semiconductors, and particularly the data thread that we left off a little bit ago, and how that sort of like proprietary data collection is actually like something that could actually scale in costs like way higher than, going from your 10 to your 100 to your $1 billion, compute bill to training your next model. What's that dynamic there?
Yeah, and I think the first thing in terms of AI being similar to semiconductors is just from a perspective that everyone's looking at it. It's like a lot of VCs as well, a lot of countries are looking at it similar to software. But if you actually break down that entire dynamic, take it going from, it might cost millions of dollars, and it does for ChatGPT to train. It might cost a lot of money to actually scrape the data, etc. That looks more like a semiconductor company, as we were just talking about, than a traditional software company where you can pretty quickly and pretty cheaply iterate and get products out there. You have to basically get the product right, or else if you're just going, oh, we're just going to retrain the model, that's kind of expensive. So that's the first point. The second point in terms of the proprietary data collection is that when you're actually getting into really interesting applications that people are like noodling on and ideating on, for example, materials design, drug discovery, a lot of these different applications that have to do with physical world, getting the data there can be very, very expensive. One is the data doesn't exist. So it's not just conveniently on the internet waiting for you to potentially, against terms of service, scrape it off of the internet. It doesn't exist at all. And if you need to collect it, we're talking about something that, again, is a physical activity that you can't crowdsource to the entire internet. if we're now talking about, say, something like, I want to know how the I want to know specifically how these different drugs react with all of these different mammalian models, say mice. How are you actually going to gather that data? It's not going to be like people on the internet clicking stuff, right? It's going to be, I mean, like internally at Creative, we kind of, it's not even a joke actually. It's like we talk about what will a, say, drug discovery company that uses AI really look like? And the argument is it's not going to look like just a software company. What it's going to look like is a pipeline company where it's like you have AI on one side, but on the other side, for the feedback loop, you actually have a robot arm, when a startup is in its early stages, also known as a postdoc. You have a robot arm that basically does the physical experiment, creates physically the drugs or the proteins or the biologics or whatever, and physically administers it to, say, the mice for a mouse model, and then takes that data, feeds it back into the AI, and goes around. That end piece that touches the physical world, that's super, super expensive to do, right? So a lot of the companies that are going to be interesting are going to be the ones that actually do that painful step and are able to incorporate that data well. Because on the AI side of the equation, that's going to keep getting better, but it's going to keep getting better on its own.
So how should people think about AI and jobs getting disappeared and or created?
Yeah, I mean, this is an interesting topic because I think a lot of, I mean, even economists, which is a little weird to me, often say, yeah, AI is different, it's going to create mass job losses or whatever. It's particularly strange because right now we're actually sitting on a huge job, like a huge, huge gap in terms of number of people filling jobs rather than, mass unemployment or something. I think the argument might be a little different if you're sitting on mass unemployment, like hard to actually get people into jobs or whatever. But from the perspective of base economics, I mean, one is AI is a tool, right? From the perspective of, okay, like inventing shovels will suddenly put construction workers out of a job. That's probably not true. So it's like the more productive you are, the more willing you are to actually use workers and a technology to do the thing that you're actually trying to do, which is generate some sort of output. The output of the construction industry is a building, not the number of workers that you require to make the building, right?
And also like the quality and the amount of output of whatever output it is that you're making, like the demand for that is infinite. Like you could always do, upgrades, better, faster, more tasty, higher. My phone's titanium now. I didn't know I needed that, but like, yeah, why not? Thanks, Tim Apple. So yeah, I mean, you had this great riff about AI not taking away jobs, but taking away job openings, which is something that is sort of struck with me. So James, let's use a little toy model for one of your portfolio companies, Picnic, which makes pizza. Which makes pizza robots. So, like in New York, I live in New York City. You have all these articles about like restaurant labor shortage. But there is this like interesting microeconomics puzzle that like why you wouldn't just pay people more and then like bring more people into the service industry and then all of a sudden whatever, you charge me a little more, I go to the restaurant. Like why are we at like a local minima here when it comes to sort of suppressed wages in restaurants, who have customers who want to go to them, but like still can't figure out a way to increase their margin such that they can pay the people enough to keep them around.
Yeah, totally. I mean, if you take a look at, say, the very online community or politicians or whatnot, the argument is like corporate greed. That's why people aren't raising wages, and that's why we can't get people into these jobs, right? But if you actually look at businesses and business owners, like they need people to actually make the business turn and work, right? If it is the case that they can actually pay people more to have them stay to actually run the business, they're actually going to. When you're talking about a pizza shop or food services or logistics or some of these other industries, you're talking about the reason why they aren't actually paying more is that the business can't actually sustain more. So if you think about it, all right, pizza shop. Pizza shop wants to retain workers and dishwashers and these other things in order to sell more pizzas because otherwise the pizzas aren't going to get made. how do you actually pay the workers more if your margins are already compressed down to 10, 7, whatever percent? Well, you can raise the prices of the pizza, but the problem is like the customers might stop buying as much. So then suddenly you've actually self-defeated. You've defeated yourself by basically everyone's competing against you in terms of pizza, and suddenly you raise the prices, and suddenly people aren't buying your pizzas. That's a problem. You can try to compress the margins even more, but at that point, you might just go out of business, especially in terms of instability in terms of the business. You can't ask your landlord necessarily to just bring down your rent. Like, you actually don't have the room to increase wages. That's usually why wages aren't getting increased. Because if you talk to most business owners or whatever, they're happy to actually increase wages because if they do, then maybe they can get really good workers and then they stay for longer and they don't have to deal with the turnover as much. The problem is they can't. However, if you suddenly have a magic tool that drops from the sky that has robotics or whatever, that suddenly makes a single worker 10 times more productive, and are able to go out and sell more pizzas or sell them for cheaper or whatever it is, and from an economics model suddenly increase your margins. I mean, if you've say increased the productivity 10x, if you've increased your margins by like 5x, if you want to talk about corporate greed, yes, they're not going to pay the worker 10 times as much probably, but yeah, you'd be happy to pay them twice as much if they're suddenly 10 times more productive and you have 5 times more margins, right?
But yeah, how far away are we from robot pizza makers? What are the sort of are the hurdles like like is the robot is there are the sort of robotic challenges we're facing today, like to what extent are they on the same sort of curve that we've seen over the past few years with large language models?
Yeah, some of the general models are able to help, but the problem is it's actually easier to use AI to either significantly enhance or basically replace certain tasks in the knowledge worker sector. It's actually much harder, but much more necessary to do it in the labor and physical activity sector. The problem is, it's just from we've had millions of years of evolution, whatever it is, to basically be able to manipulate and move things around, right? Like I can pick something up, I can hold it without crushing it, I can move it around, I can throw it, I can do all sorts of complex tasks that if you actually break it down, it's very, very complicated in terms of as a model to actually do all these things.
For the NFL, they used to have these sort of like robot mascots or whatever that would like play football. But in fact, the amount of sort of like mental calculation, like body awareness or whatever to play quarterback in the NFL is like so many orders of magnitude more complicated than what like any any robot could even think about doing today, or even in the next 10 or 15 years. It's just it is remarkable thinking about that, the sort of like millions of years of training we have to like run around and throw things and pick stuff up and put it down.
I mean, and the other factor too is also exceptions. Because from an online perspective, if you mess up something on a digital level, you just can rerun it or whatever. The physical world doesn't tolerate exceptions as well. So the ultimate example probably is self-driving cars. If you have an oopsie there, that's a pretty big, it's a pretty big bad outcome versus if you have an oopsie in the digital world, right?
You now run a hard tech VC firm, which is a long way from Bridgewater, where we both started our careers looking at macroeconomics. Very curious, sort of. I was, I've also ended up in tech and sort of, I guess. But James, what was your story to this current profession?
So Bridgewater was actually super interesting. I really liked being able to look at the macroeconomy and stuff in all these different ways, and it's still been really useful in the current profession and stuff. But the thing about global macro, which is the area that Bridgewater plays in, is that you can abstract away a lot of stuff. Like, you don't really have to worry about the messiness of people, you don't have to worry about the messiness of like technology change or whatever. You're playing on like the the 50,000 whatever foot level of like, you're looking down at like economies with US equities versus German equities, or the currency or the exchange rates or the interest rates, or all of these different things, and you can just abstract away a lot of stuff. It's probably the closest thing in terms of finance to abstract math versus applied math as you can get. So I wanted to get closer to the ground and closer to technology, especially seeing a lot of really interesting things happening, especially in compute and AI, but also synthetic biology and different changes in advanced materials.
Yeah. So, my story, I remember, so I worked in client service and we had these, a lot of our clients were sovereign nations. We had their wealth, the sovereign wealth funds. And like part of what we do is like Bridgewater would sell a return stream, but also sell like, oh, like we'll like have Jordan Schneider tell you what to do with your economy or whatever. There was something that really struck out to me was like, fiscal policy, monetary policy, it's important, and you don't want to fuck it up. But at the end of the day, if you're thinking over like a decadal horizon, like productivity growth is what's going to get you there. And what is productivity growth? It's education, it's healthcare, keeping your workforce safe, but it's also technology and sort of figuring out how to get your country to innovate and continue to innovate and sort of like bring that innovation out into the broader economy just seemed to be like the real juice. And like, it's the sort of whole Bridgewater like vision of the world of like this very Newtonian physics of like everything is kind of static, but like technology just isn't at all. And like we've all seen this in a beautiful way over the past 24 months with our sort of like large language model revolution. And it just seemed much more exciting to me, I think, than just like watching Argentina blow up for the 14th time and like figuring out how to like find some spread between it and the Brazilian real or whatever. So anyways, I'm glad we're both here. I think it's a good place to be.
Yeah, totally. And yeah, hey, from the hedge fund perspective, even just abstracting away from Bridgewater, the thing is, you're not supposed to affect the economy. So you predict things, you trade on things, and you make money. But you're basically supposed to come in and not affect markets, because if you do, you're actually losing money from it.
Sure.
So the perspective is very, very different versus, say, when we're talking about VC now. Time horizons much longer in terms of 10-year funds, and also from the perspective of what will you actually do and whatnot. The perspective that we have is like, look, we're not explicitly an impact fund if you're talking about impact investing or whatever, but the way that we invest, we're investing in some of the biggest problems facing humanity, in our opinion. So it's aging populations, which gets towards labor shortages, it gets towards rising healthcare costs, and in terms of climate change, it gets towards technologies that we really need to both make an energy transition and also just sustain our current trajectory in terms of trying to decrease carbon emissions and stuff. And our perspective is like, look, if you actually scale these things, not only will we make money, but it will actually help the planet a lot. And that's not really something that you can say in the hedge fund industry. It actually is completely counter to what you would want to do if you're at a hedge fund.
So James, we've talked for a long time about sort of all the challenges, opportunities in the sort of like hard tech or like software increasingly becoming hard tech space. I'm really curious, what your, when technologies and ideas turn from like uninvestable to potentially, interesting things for folks.
Yeah, totally. And I think when you talked about software investing before versus hard tech investing, that's actually a very useful thread to pull out related to that, because with software you could actually just kind of invest in people because software is easily changed enough. This is oversimplifying, but you can basically change your code, change your Google AdWords target, and suddenly magically be in a new market the next week. Hard tech, deep tech, whatever you want to call it, doesn't actually work that way. Even AI, like we just talked about, actually takes quite a bit of work and quite a bit of money to change what it's actually doing, because you need to retrain the models and stuff, let alone, say, synthetic biology, trying to make yeast or bacteria or whatever do something completely different. You actually not only have to look at the team, which is still important, you have to actually really, really, really understand what market you're going after. Now, the interesting thing is, I think people get, I wouldn't say blinded per se, but they get fooled because a lot of these deep technologies are actually super general purpose. You can use AI for a lot of things. You can use synthetic biology for a lot of things, right? The question is, what is the right market to go after at the start? Like putting aside the like excitement about the technology as a whole. What is the right market to start with and then expand to the rest of it? And from that perspective, what's the right way to execute against it? But beyond that, you also have to not get diluted, or you not have to not get tricked by the entire thing around a technology is just a breakthrough or two away from being world changing. So again, I think this is another trap that a lot of people fall into in terms of looking at this particular area. There's a difference between what we would call engineering risk and R&D risk. Engineering risk is actually hard enough, which is, in the way we define it, is basically risks and problems that you can contain, constrain, and basically put a bound around in terms of, I need this many engineers and this much time to basically figure out this problem. Usually that's how to tweak the technology, how to get it to specifically get from this scale to a bigger scale or something like that. And that's engineering risk, and that's investable because that's basically what you're trying to bet on and trying to scale it. From a category perspective, there's a lot of categories that don't actually have those bounds, or at least don't realistically have those bounds. That's basically R&D risk, where you just need a breakthrough or two for the market or for the technology to actually become viable. And the problem with that is that it might happen next year, but it might happen 10 years from now, or it might happen 10 years from now. Like AI, for example, as our conversation has covered a lot, seems to be coming into its maturity now and is mostly engineering risk on a lot of applications. But say in the 80s, everyone was predicting AI is definitely going to make a huge difference and it's going to take over the world. Same thing with the 90s. Same thing as you went 10 years sort of each decade, AI was supposed to have arrived. But the problem is, before it actually arrives, you don't actually have a company, or you don't actually have a technology that can be commercializable.
So just the idea of like big versus small markets, it's like I had no idea how big pizza was until my friend started working at Slice, which is it's basically like a SaaS company which sells only, it's just like, it's like a delivery, it's sort of like, like a payments delivery, whatever, like operations thing, only for American, like independently owned pizza companies. And it's raised like $125 million. It's like a real like venture-backed success. So the idea that pizza as like pizza is actually like kind of maybe the right place if you want to start, automating some kitchen stuff.
I mean, the fascinating thing is when you're talking about pizza being huge, which is true, burgers are even bigger. Like some of these other food service segments are even bigger than pizza, but the reason why we think that pizza is the right place to start and this is more generally applicable too, has to do with market structure. If you're talking about burgers, again, oversimplifying, but if you're talking about burgers, that's McDonald's. Like everyone else in terms of the pie chart of market share, in terms of like what it is there, are tiny.
Yeah.
The interesting thing about pizza is not only is it a large market, it's an oligopoly. A lot of the biggest players like Pizza Hut, Domino's, Papa Murphy's, whatever, you sort of go down the list, are actually similar-ish in size. They're bigger players than others, but they're similar-ish in size, which means a startup can actually be able to go into this market, have multiple shots at getting into one of these big players, and also play them against each other. If you were a food service or robotics company trying to go after burgers first because you looked at it and said that's the biggest market, you ignored the market structure part of it, which is you have one customer essentially that you need to sell to, and that customer basically has all the leverage in the world against you.
What's your take on where the holes are? Where if the U.S. government spent $100 billion to sort of boost, not just semiconductors, but sort of deep tech more generally, like where it would be, where that sort of broader investment might be most usefully spent.
Yeah, I mean, basic research, typically speaking, is the place where governments and like general government spending can do the most good, because the basic research and a lot of the research before the technology is actually commercializable, so R&D, so basically we don't know what we don't know, and we need to find out in terms of spending and whatever to get to a commercializable point, is where government spending is really useful. The thing about trying to use government spending after that point, which is actually what a lot of countries do. If you look at a lot of the Asian countries, for example, they try to pick winners in terms of spending government money to try to get something to commercialization. That tends to not work particularly well because of a dynamic that we were talking about in terms of you have to pick the right market, you have to go after the right market, you have to think about the market structure and everything.
So, the sort of dynamic, that sort of R&D versus engineering risk dynamic is really interesting. So, there's this pipeline of sorts, right? Where you have the NSF, you have ARPA-E, you have DARPA doing the kind of like science-y science. And then you have this kind of other interesting, these like bridge organizations activate. We had Elan Gur, the CEO of ARIA in the UK, on the podcast a few years ago. Stanford and Berkeley also have these sort of like, hold your hand out of the lab and into the commercial ecosystem, like little, not really accelerators of sorts, but, incubators, let's call them. What function do these organizations pose? And sort of where do you think you guys pick off, and what's like the value that yourself and other investors play in taking those slightly more baked professionals and ideas and science experiments and bringing them ultimately to market?
Yeah, I mean, NSFI Core, Skydeck, StarDex, these other accelerator incubators that try to take a technology and bring it to the first step actually do a great thing for the ecosystem, which is they get them to the first step. That's still super important in terms of it. It's taking a PhD or researcher who is not used to thinking about markets at all, and who's just thinking about the basic research and what hasn't been discovered, and basically making them think about, okay, what can this technology be used for? Let's talk to customers. Let's try to figure out if there's any money to be made here. And taking that first step is super important. If only that were the only step to making a $1 billion plus company and then everything taking off from there. Essentially where we take over and where the VC ecosystem takes over is essentially from that step, right? Now that you've started thinking about what customers and everything that you could go after, now that we might even agree this is the right market, there's 100, 1,000, 1,000,000, depending on what you want to say, steps from that, where you essentially now need to go, okay, how do I actually get this technology into the right state to initially sell to the right customers? And what's the right pricing model? And then from there, how do I actually sequence the steps of creating this? And how do I sequence the financing for bringing in money to get me to the next steps in order to actually get from A to B to Z in terms of finally becoming a huge company? There's a huge amount of complexity. There's a huge amount of difficulty there. And especially for deep tech, you don't really have much room for mistakes. So again, from a software perspective, the team can actually pivot quite a bit and do customer discovery and do market discovery. If you structure your rounds wrong, if you execute wrong, if you go after the wrong first target market in a deep tech company, that might be the last mistake your company makes. So that's essentially where we come in and do a lot of guidance and a lot of work with the companies to try to take the right direction through.
Yeah, it's sort of interesting, the sort of like human capital aspect of this, and that, a lot of your founders or the a lot of the founders are going to be PhDs who did not grow up, running lemonade stands, because that's not what they were into. They were into science, and then all of a sudden they have to, navigate these very tricky issues of hiring and finding customers and knowing, when to bend, when to do what the customer wants and when to, continue on with your vision and, picking markets and whatever. So it does seem to be a really interesting dynamic of like, where are they going to get that training? Is that hand-holding going to come from the VC? Are they going to hire like a COO who's going to be their like quote unquote business person? How has that, what are the models that seem to work and don't work when like trying to inject business sense into these, hard tech founders?
Yeah, I think the bigger successes, definitely within our portfolio, but just generally speaking, when we've looked at it, is when the VCs are much more active, because it isn't just giving like bite-sized fortune cookie like advice in terms of like think about markets or things like that. It's actually, okay, here's how you actually deal with a lot of these different issues, a lot of training in terms of learning how to manage companies and stuff, which again, it's to be fair, it's like it also applies to software companies for those basic pieces of it. But in terms of taking a PhD who doesn't necessarily have the interest or the inclination towards this, it's also giving them the advice, here's how you try to transition towards that kind of CEO role or whatever. Or at some point in time, it may be giving the feedback, you're either not good at this or you don't seem to like it. We need to bring in other people. And that's something where you actually do need investors, you do need a board of directors to actually make that, to help that in terms of directions. We've had a really popular trend of having founder led, super, like, founder friendly, whatever companies, in terms of always defer to the founder, always give it to them, and you kind of get out of the way. And again, that kind of works for software and marketplace based companies, especially with founders who were already super oriented and super keyed in to these marketplaces, to these customers already. That doesn't necessarily work for these deep tech companies. And I think the interesting thing is, talking to some of the old timers in the VC space, it used to be more popular to basically be more hands-on, take board of directors seats, and in certain cases change the management of companies. That became something that became very unpopular during the software era. But what we're finding is there's actually a real reason why VCs used to do that. And that's because for these companies within deep tech, which used to be semiconductors, it actually matters a lot doing these different things and ensuring that the company is going in the right direction. And that, in our opinion, is actually more founder friendly than letting the company die because you just deferred to the founder at every single turn.
Yeah. But I mean, there must be some sort of selection bias at the front, right? Like people who are going into Activate and iCore, like they have some dog in them on some dimension for like, wanting to be really rich or wanting to have their ideas spread across the world. Or I mean, like there's a reason they're not just like going to be professors and like living that life, right?
The reality is yes and no, because in terms of the people who are actually motivated towards going for this, it's not. It actually, the most common reason why we see people interested in doing this is in academia, their research and their technology will never see the light of day. There's no one who's actually going to take it and run with it because no one else even necessarily knows that it exists. And if they go and be a professor, what they need to do is not help this company get to the place where it exists and stuff. What they need to do is actually take this technology or take their research and just push it forward into other tiny little pieces that haven't been covered by research yet. So it's actually a very, very different kind of skill set, and it's also a very, very different kind of motivation. Anyone who just wants to see their technology get into the world is actually going to be interested in joining these programs. That doesn't necessarily translate to a market orientation of wanting to make money, which is what is required to actually sustain the company and push it forward.
This was fantastic. Thanks so much, James. How can people get in touch with you?
So I am on Twitter, X, whatever it's going to be called next week, at A James Wang. I write actually a Substack now on some of these AI topics and whatnot called Weighty Thoughts. So that's weightythoughts.com. And you can also get in touch with us generally through invest@creativeventures.vc if you're either interested in talking to us about VC in general, or you have a company that you're interested in pitching us. So, yeah.
James Wang,
Okay.
Thank you so much for being a part of China Talk.
All right. Thanks so much, Jordan.